Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, March 4th, 2016. This week stocks stalled at the 200-day moving average, and on SPY the gap resistance is just above. We look at QQQ, which seriously underperformed S&P 500. Bonds fell back to the breakout levels, and especially munis at their first Fibonacci retracements. The US dollar is sort of chopping sideways, with neither bulls nor the bears winning the fight. We look at gold in quite a bit of detail, and next week should be pretty crucial for gold, GDX, and my internal index, gold breadth index, GBI. Look at oil, where there may be a rising wedge and a possible bearish divergence. XLE, the energy ETF, looks also very overbought, and natural gas hit multi-year lows again this week. Okay, so S&P 500 ETF SPY daily time frame. We had a pretty good rally here of the 52-week lows here in February, and you don't have to be a very experienced technician to say that this is pretty powerful move for the index. This is about 11% move of the lows here and to the high. So even if you're a stock bull, you would probably think that at at the very least this index is entitled to some sort of a rest and possibly a sideways consolidation. Now, I think that S&P 500 is in a bear market, so this rebound I'm treating as a counter trend rally. In other words, I'm looking for opportunities to go short, and I'm not looking to buy just yet. This could change at any time, especially if S&P 500 continues higher and possibly makes a new high up here. But even then, I still need to see quite a bit of confirmation before I even consider opening longs. Returning to the very minute day-by-day details, we're basically in the resistance area marked by the declining 200-day moving average, this green line here, and just up ahead there is this big gap. So this gap is from the first day of trading. This is December 31st, and this is first day of trading. I don't remember, I think it's January 2nd. This is a big gap here, it's still unfilled. So I'm guessing, unless we just collapse here, we're going to somehow retest this gap and this resistance area. Now, already it's possible that we're seeing some selling, or at the very least some profit taken, because you can see there's this selling tail out of the top. Anyway, so yeah, at the very least, I'm thinking that we're gonna see some retest of a test of this gap and see if it rolls over here. Now, again, this is a pretty strong resistance area. Up here is a major resistance, and I'm not sure it's gonna make it that high. But if it's gonna roll over, this would be a great place to do so. All right, that's it for SPY. Let's move on to the S&P 500 itself. Okay, this is S&P 500 large cap index, the underlying index itself without the dividends, and this is a 2-year low here in February. Now we had a pretty powerful rebound, as I just showed in the previous chart, and on this chart I mainly wanted to show the percentage of stocks above the 20-day EMA and the percentage of stocks above the 50-day EMA. So you can see that they are already in a very overbought territory. We have 84% and 92% respectively. So that's very overbought for a bearish security, which I think this is. And if you're looking to go short, that's probably already not a bad setup as it stands right now. We'll see if it rolls over here or if it continues higher. But at the very least, this is an overbought reading that I think should be consider it if you're trying to go short. Same thing with bullish percent index. We're already at more than 70% on the buy signal, so this could be considered overbought because we are in a bear market. Notice also that percentage of stocks above the 200-day EMA is still below the 60% mark. So that's showing that long term we're still, kind of underperforming, and I think we're in a bear market still. All right, let's move on to QQQ. This is QQQ PowerShares Nasdaq 100 ETF. So kind of similar picture here, but I don't think those are multi-year lows. Nevertheless, we did rebound, and this week is kind of interesting because you can see that we had a Tuesday, we had a large white candle here, and then basically the rest of the week we just kind of traded sideways. Whereas if let me go back to SPY, you can see it was the same thing, a large candlestick on Tuesday and then a continuation higher. So it's kind of interesting that QQQ really underperformed, for the rest of the week. Not exactly sure why, but that's just a fact of the matter. Nothing here of interest. So anyway, so like I said, same thing with QQQ as an S&P 500, bearish security. If I was trading this, I would be looking for shorting opportunities only, and I would not be looking to go long just yet. All right, switching gears to the bond universe. This is TLT, the long treasuries fund. So all-time high here just in early February, and then we had what I thought was an evening star 3 candle pattern, very rare actually pattern, but I think it is an evening star pattern, and now I think it's a confirmed one as well. So it looks like we had the pattern and then kind of rallied and then went back down. Now this breakout, there are actually two breakouts here, I think. One is above this level here from October, this one right here, and then the second breakout from a level back here, more than 6 months back, because this is a 6-month chart. In any case, this is an all-time high, so this is very bullish action. So a pullback of some sort is expected. We might continue down further. It looks kind of like this Friday's candlestick kind of looks like a hammer, but not exactly a very bullish looking hammer. I would like to see a hollow body, but it's actually a filled body, and it's a red candlestick. So we might continue kind of sideways, possibly maybe even down, and then basically at a certain point, it'll become oversold enough for for us to consider going long again. So I'm not looking to short bonds. I'm only looking to go long because this is a clearly very bullish action. Especially if stocks come under selling pressure, most likely bonds will benefit. This is AGG, iShares Barclays Aggregate Bond Fund, kind of like a proxy for the United States bond market. Kind of similar picture to TLT. We had also a breakout here, we had smaller breakout here, beginning of the year, and then a bigger breakout in January, a continuation to all-time high. Also similar pattern. I think this was a kind of like an evening star pattern with 3 candlesticks there. This one looks significantly stronger than TLT, or at the very least, TLT is more volatile than AGG. So, whereas TLT already came down and is now retesting this breakout, you can see that AGG is still higher than the breakout level. So, I trust AGG more as a proxy for the bond market than TLT, but if TLT comes down more, then most likely AGG will also follow. Anyways, we're still seeing higher highs in unbalanced volume. You can see it's pushing higher, even though we have a little bit of a pullback in prices. So overall, I think this is bullish action, and any kind of pullback most likely will be bought once this pullback or sideways consolidation is over. Let's move on to the municipal bonds then. Okay, this is a municipal bond fund, MUB. Very strong move, powerful, really, move from here or even from here in December, in November rather. So what I did is I put in a Fibonacci retracement from the low here in November to the high here in February, and basically we're, MUB is kind of correcting slightly down and sideways to the 38% retracement here. Now, also here at around 38% retracement, we have a gap up, which is still unfilled. So it would make sense for MUB to come down here and maybe attempt to fill this gap. And this is a very normal and healthy retracement. So if it retraces 38%, 50, or even 62%, that will be a completely normal, healthy, bullish action. And I will be looking to buy. And also my subscribers hopefully will be also looking to buy this, not looking to short it at all. This is a healthy bullish action in bonds. And now down below here I wanted to point out interesting thing is this is a money flow index, one of the indicators which measures volume. It's one of the volume indicators, and it's considered to be overbought when it's at 80 or more. And look how overbought it became, and how it became overbought and remained overbought, and MUB just continued to push higher and higher and higher and higher. So what this basically shows is that when a bullish security is overbought, I usually just ignore, well, not ignore, almost ignore all of the overbought conditions. You have to be kind of careful not to ignore everything, but most of the time I just ignore overbought conditions, because in a bullish security it is normal to become overbought. And if you're trying to time the entry on the short side, like for example right here, you'll be thinking, oh my god, it is overbought. And also I'm seeing this possible shooting star with a red candlestick confirmation next day, so I'm gonna short it right there. And what happens? Nothing. It continued higher. So that's what I'm trying to say is, attempting to find a top in a bullish security is very difficult, and it sometimes just continues to make new highs, new all-time highs, new all-time highs. These are all all-time highs, so it just continues pushing higher and higher. So in this case, I'm actually doing the opposite. I'm only looking for bullish setups and bullish opportunities. Right, let's move on to the dollar. Okay, this is US dollar index, daily time frame. So generally speaking, I think that the dollar is bullish. So I would only be looking for bullish setups. But over the past or rather this is 11 months chart, the index really didn't go much anywhere, just kind of chopping around this big area. So basically, if we get a breakout above the 100 level or a breakdown below like 93 level, then the next move would be quite powerful. But as of right now, there is just basically a big just trading range up and down. I think the direction, like my personal bias is the breakout to the top, because most likely Federal Reserve will raise interest rates while the rest of the world is actually going negative interest rates. So more detailed here, we still have this gap here, unfilled gap up from beginning of February. So possibly maybe it will come down and attempt to fill this gap. But again, the support here has held for now, so maybe it will come down and retest the support again. Basically it's just big choppy range. But in any case, if the dollar does weaken further, then that would certainly help one commodity that we'll look at next. All right, next we'll look at gold. And gold has been on a lot of people's minds of late because of this pretty powerful move. I'm not gonna deny it. Of the lows here in December, actually to today we had a well, this was a high for this move, so pretty powerful move. Now today's action, you can see that it was like a big like we opened here during the day, we spiked higher, but then we closed actually here. So it's possible that this is a rejection candle, and the higher prices were rejected for now. Again, there was the same thing here. I thought this was a rejection candle, but no, we continued higher. So we'll see where this goes. Now, next chart I'll show. I presented my gold breadth index. Actually, here, interesting enough, volume is still lacking, so we can see that we have not made a higher high in unbalanced volume just yet, so that's kind of interesting. So next chart I'll show gold breadth index that I presented several in the previous couple of videos as well. Okay, so this is a price of gold on a daily time frame, but what I did is I removed the price and I only left the moving average, the 50-day moving average and the 200-day moving average. So some of the people who watch this videos I've shown this already in the past. Now this is a chart going back way back to 1980s, and my data starts in 1984. So basically what I did is I created what's called a gold breadth index. It has multiple inputs, and what it does is it attempts to show if the gold is currently in a bull market or in a bear market. So these up and down arrows basically show whether or not the market is whether or not gold is in a bull market or in a bear market. This down below here we have another indicator, which is one of the inputs for the gold breadth index, and it needs to surge to above 70 to be in a bullish camp. And as of right now, it is still lagging somewhat, and it's still at 63 and a half. So basically I'm waiting for this indicator to turn bullish, to close above 70, and then at that point I'm going to say that yes, surely we're in a new bull market in gold. As of a Friday close, on Friday, March 4th, so far I cannot say that. So I'm still treating this rally that I just showed, which was pretty powerful rally of the lows, as still a bear market rally. In other words, I'm only looking at short setups in gold. So that's what I'm looking at. This is a gold breadth index. Next chart I'll show GDX, which actually shows similar patterns. Okay, this is GDX, market vectors GDX, gold miners ETF. Excuse me. Of the lows here in January to the high today, this is actually a very powerful move. This is almost 100% move. So yes, certainly a very strong move if you were able to catch it off of here. Since I was only looking for short setups, I was not participating in this rally, but clearly I'm looking for to go short. So today's action actually kind of shows even more rejection than the candle of gold itself. We opened here, tried to push down, but then we spiked really high up and then just completely fell apart throughout the day and closed actually near the lows of the day. So this looks kind of like a shooting star candlestick. Again, there were several patterns here in the back, going back here. This was possibly a shooting star candlestick with a bearish engulfing. Clearly didn't work out. We had another rejection like candlestick right there. We had another bearish engulfing right there. So none of them have worked out so far. Will this one be different? It's difficult to say. We'll see. All eyes are really on gold. Also, if the gold breadth index that I just presented turns bullish, then again, I will not be looking for shorting opportunities. Down below here, we have a gap that has not been filled. So again, it's possible that we're going to turn around and just fill this gap. So this is pretty significant drop. There's another gap here also that has not been filled. So that's something to consider. If we do collapse down here, that's basically all-time lows, and we could be retesting all-time lows. Market breadth has indeed improved. As a matter of fact, this gold miners bullish percent index is currently at 72%, and this is the highest reading, one of the highest readings during this current bear market that started in 2012. So that's certainly a strong achievement for GDX. Also down below here we have new highs, new 52-week highs being set, and this is also quite a strong achievement for GDX, whereas just recently we were setting new lows. So anyways, next week could be crucial for gold, and we'll see if it actually becomes bullish per my internal market breadth indicators. All right, this is light crude oil, WTIC West Texas Intermediate on a daily spot price. This is a bearish security. Clearly, we were hitting multi-year lows, just hit multi-year low here in February, and then rebounded. So maybe this is a rising wedge, and this looks certainly like a rising wedge. If it is indeed rising wedge, there is some resistance here. You can see a relatively large volume bar versus this bar, which is basically not there. So we're basically there. It's possible that we'll just break the wedge and continue lower to retest the multi-year lows. Down below here, we also have a bearish divergence. This is on balanced volume, showing that volume has been lacking on this advance. You can see that this point right here, today on Friday, is higher than this point right here in late January. But with unbalanced volume, it's actually the opposite. We see that unbalanced volume is the unbalanced volume is trending lower. So this is a bearish divergence, and it's possible that it will play out. Divergences are kind of difficult to trade, but they are kind of good to have, to kind of keep in the back of the mind, sort of. If we don't collapse from here and continue higher, most likely the next rejection level would be around here in the 42-44 area, which is a 200-day moving average also there. Staying on the topic of energy and oil, this is XLE, Energy Select Sector SPDR. One of the weakest sectors out there, again, multi-year lows here, whereas S&P 500 itself hit only 52-week lows here. So oil has been, and oil-related energy sector has been under pressure for a very long time. So no question about it, this is a downtrend in security. We have the rebound of the lows with the general market, basically. And now on Friday, so we're here at around, 62. So maybe there is already resistance up here from the peaks here. But the important thing is on this chart, I wanted to show, this is bullish percent index for energy. Right now it's at 90. So it's, in my opinion, this is very overbought reading for a bearish security. Here, back down below here, I just said that all oversold readings in a bearish security should be ignored, and not necessarily. For example, right here, I actually pointed this one out. You can look at some of my videos. In January, I said that bullish percent index for energy was extremely oversold. It was basically at zero. This was like almost a counter indicator that the security has become extremely oversold and a bounce is likely. And lo and behold, we got a bounce. Now, I think we have the opposite. We have a very overbought reading here in bullish percent index. And I would not be surprised if we roll over and possibly retest multi-year lows again. All right. That's it for XLE. Okay, this is natural gas spot price daily chart. So here we had a very powerful rally of the multi-year lows back then in December, and this was a very sharp rally, which had all of the characteristics of a short covering rally. So basically very sharp, very quick. The traders that were short here covered their shorts, and the price really rebounded. Now, if you watch some of my videos, I always maintained that this is a short covering rally, and I was only looking for shorting opportunities. We actually took an opportunity with my subscribers here, around here, and we're sitting on about 100% profit because we bought inverse ETF called DGAZ. So this is again multi-year lows, and they're actually below this low. So this is quite bearish again. Now here down below we have a bullish divergence with unbalanced volume. Again, divergences are hard to trade, but this is something to keep in mind because we are at multi-year lows and we have a divergence. So it's not entirely impossible for swing traders to come in here and attempt to push the prices higher. So some sort of a bounce is not to be ruled out. But generally speaking, again, I'm only looking for short setups, so I would probably just ignore this bounce or potentially look for to short it again. That's it for this week's recap. Please stay tuned how to find us on the internet. Thanks for watching and have another great trading week. Bye-bye. So I wanted to show you how to find us on the internet. Please go to MasterChartsTrading.com. We do have a trade alert services that are now active. Please consider subscribing. You get 3 weeks free trial, and it's only $24.95 per month thereafter. You get access to my charts, exactly what I'm buying, exactly what I'm selling. I have an internal blog. Also, I have several videos that have to do with trading and various aspects of risk control, as well as just the psychology of trading. So please do consider signing up. The subscribers are getting really good results, I think, and I'm getting some very good feedback. I have a performance section here where I post the actual portfolio percentage change. The inception date was in 2015 October, so it's not a lot of history yet. And there's some backtesting results that I feature here as well. The blog, of course, is where you'll get this information, and there's a video section where I separate them out for easier access. Click on the social page, and here we have a link to public charts page where most of the charts that you're seeing in this video are going to appear. You have Twitter, Facebook, YouTube stacked with accounts. You can find us there as well. If you subscribe to our mailing list, you'll get a special price for our trade alert services. That's it for watching. Thanks for watching, and have another great trading week. Bye bye.